If you're like most people, the topic of taxes is quite intimidating and may even make you feel overwhelmed every year, especially if you're self-employed. But no matter your comfort level with taxes, I have a special guest who can make even the most complex IRS codes feel lighter and easier. First, I want to welcome you back to the Money Girl podcast. I'm Laura Adams, an award-winning author, spokesperson, money speaker, and founder of the Money Stack. That's my Substack newsletter. And of course, host of this podcast, Money Girl, with over 44 million downloads. You can always connect with me, send your money question, and sign up for the Money Stack, and learn more at lauradadams.com. Joining me today is Hannah Cole. She's the founder of Sunlight Tax, where she specializes in friendly, informative tax education for creatives, artists, and people who feel like the black sheep of the business world. She's the author of the brand new book, Taxes for Humans: Simplify Your Taxes and Change the World When You're Self-Employed. And there's also a companion workbook. Hannah is also the host of the Sunlight Tax podcast. What I find so interesting about Hannah is that she's a longtime working artist who also became an enrolled agent. That's a tax credential awarded by the IRS. She's dedicated her career to empowering people to understand their taxes, conquer their financial fears, and maximize their tax benefits. So whether you're a creative entrepreneur or an employee who just wants to understand how to legally pay less tax, this episode is for you. Hannah and I discuss ways to shift your money mindset and overcome any negative money emotions. We talk about misconceptions that creatives and entrepreneurs have about taxes. We cover common tax mistakes that are extremely expensive. We cover changes that are in the One Big Beautiful Bill that affect your taxes now. Tips for taking control of your money and tax liability, and how to know if your auto loan interest is tax deductible using the VIN Vehicle Identification Number Decoder tool. And I'll have a link to that in the show notes. And we talk about much more. Here's my interview with Hannah Cole. Hannah, I am so excited to have you on the show. Thanks for joining me.
Oh my gosh, thanks for having me, Laura.
You have a really interesting background, and I would just love to start out with just a little bit about what you're doing. I mean, I understand you're a self-employed artist. You're also a tax expert. Those two things seem very like right brain, left brain. You must have a very balanced brain. Tell me how you've pulled this off and kind of how you got to where you are today.
It's been a journey. I started out as a professional artist. I'm still a professional artist, but really that's just a small business. Like artists are just self-employed. So it's not actually, it feels weird, but it's actually not very different from just a side hustler or a freelancer. But I felt really frustrated at the kinds of approaches that I got from like money and financial people. Like when I sat down with my dad's accountant for the first time to do my first like adult tax return, he asked me when I was going to get a real job. Oh, it was so insulting. And just, it flooded me with shame. And I felt suddenly like, oh, I'm not in a space where I'm going to get to ask all these questions I had about like bookkeeping, quarterly taxes, like these hard parts of being self-employed. I suddenly felt in a position where I had to like defend myself. And I just don't think anybody should ever have to feel that way. Money is already vulnerable. To be put in that position is just awful. I think it gives a lot of people, especially people who feel sort of weird next to an accountant, it gives them this feeling of like, I don't belong here, or this isn't for me. And I think creative people are doing such important work. Frankly, small businesses do such important work. And a lot of times, if you are like a woman or a historically marginalized person, you can also feel alienated from money because you may also have been talked down to in these settings. So for me, I just felt like going back to school for taxes and accounting to be able to bring this information to people doing good work, like good ethical people doing great work in a way that feels more kind and caring and sees the value of what you're doing. That was really my mission.
Love that. That's so amazing. And so you went back, you became an enrolled agent, is that right?
Hmm.
And then started your firm. So tell me a little bit about that. And are you exclusively working with creative people or is it kind of a mix?
Yeah, no, it's definitely a mix because tax literacy in in this country is low. A lot of people don't realize that they fit in that category. So self-employed means small business. It's anybody, you may get 1099s, you may invoice clients. It's anybody who files, technically a Schedule C on your individual tax return. That is the default place. That is who I serve.
I'm glad you mentioned that because that's something that I talk about up front in my book, that there are so many different, so much jargon, so many different words that we use. And people do think that a contractor is different from a freelancer, different from a small business person. And I'm like, no. And, if you're earning any income on your own, if you might be both an employee and self-employed. If you've got a day job or you're getting a paycheck from an employer, you're either an employee rather, or you're earning your own income and you are, as you said, self-employed. And so with that comes a responsibility to report that income and also the right and the privilege to claim deductions and, take advantage of all the things that we get there. So I think that's pretty neat that you were able to kind of focus in on that as a creative person. And I'm curious, what kind of art and creative projects are you working on now?
Well, I've been sidetracked a little bit because I don't know if you know this, but I live in Asheville, North Carolina. And a year ago, Hurricane Helene destroyed my studio. So I lost 20 years of work. That's a hard recovery. It's something to be grateful for taxpayers because I felt like, I applied for FEMA money. That is not a thing anyone ever wants to have happen to them. But, if it does, I was glad people, pay their taxes and I could get some help at the moment that I really desperately needed it. But just to answer your question about the projects I'm working on, so art has been a little bit on hold because of that, though I, keep a sketchbook. But I've done a lot of writing. I'm really enjoying it's a different way of like reaching people and it's more accessible, I think, to people. So I really like it.
That's great. Yeah, I'm sorry that happened to you. That was such a devastation for that whole area. I know. Yeah, we often hear about struggling artists. There's this sort of concept of artists and maybe creative people in general that they are struggling financially. But of course, that's not the case. There are many very, very successful creative people. And so I'm curious if, as you were starting your career, if you ever felt like, you mentioned that feeling uncomfortable with the accountant. How did you get over that and get to the point where you felt like, gosh, like I'm going to go become a tax expert? That seems like a huge leap to me. How did your mindset shift enough for you to be able to have the confidence to do that? And then going into another business doing taxes, that's really quite a leap and something I think is just amazing. So I'd love to know more about how you made that leap.
Thank you. Well, honestly, what got me to that point was just tremendous pain.
Hmm.
I felt it personally as an artist, feeling very misunderstood and counted out, kind of. And then I actually worked in a design agency in New York City. So I also have experience in like the branding and design world, which, that's a creative small business, sort of close to art, but different. My boss, so he's running a much bigger company like this agency in New York City. Well, that company ended up folding because he also had this like allergy to money stuff. And so he didn't really have good bookkeeping set up. He would just go from the gut and feel, maybe get nervous about like, oh, I don't know if I'm like my expenses are higher than my income. I'm not sure I have enough money. So I'll go get another big contract, which is great, and get a big check. But then you have to hire all these very expensive designers to fulfill the contract. And fundamentally, the fact that he didn't have that tracking set up, that basic knowledge of if he was profitable, meant that when he finally did go set that up, the company ended up folding. He realized he was bleeding money. And so all of us were let go within the week. So I lost my job because he didn't have a handle on his numbers. And he was a wonderful, like, I loved that job. And it was a terrible position to be in. I was pregnant. I had a toddler at home and I had no income all of a sudden. So that was kind of the moment where I was like, well, what's next? And so that was my decision point where it's like, I don't ever want this to happen to anyone. Like, I want people like him to have the knowledge they need to be able to let this wonderful company like run the way it should. So that was the
Yeah.
moment I decided to go to school for this.
Interesting. Why do you think creative people do have such a tough time with money, whether it's just a solopreneur asking for what they're worth, on an hourly rate or a project, or as you said, just maybe not wanting to really face the numbers or just feel like it's a priority?
Yeah, I think it's a couple things, Laura. I think, in the same way that if you just tell girls all the time, you're bad at math, you're bad at math, you're bad at math, they might start to believe that, even though I don't think there's inherently anything different about boys and girls in terms of their ability to learn math or to know math, right? I think the same thing is true of creative people, where the stereotype is sort of thrown on us like, oh, you're bad at business, you're bad at math, you're bad at like organized stuff. The interesting thing is my own experience as an artist and as a creative business owner is that that's not true at all. Like, if you've ever seen an artist with a project idea, you are watching someone who's going to go get 3 new skills and like work nights and weekends to make that project happen. They're also going to squeeze more out of a budget than you ever thought possible. Artists are resourceful and they make magic in the world. I find that this stereotype about them being like incompetent and incapable and bad with money it's not really true, but they start to believe it themselves. It starts to become a narrative we take on board. I really just think it's like a culture clash between accountants and creative people that doesn't need to be there. Artists can be great with money. I think Taylor Swift is pretty good with money.
She is good with money, no doubt. You have described it as money as neutral. Tell me what you mean by that.
Yeah. So I think one of the kind of mindset things that can really plague really anyone, not just creative people, especially if you're kind of operating from a place of like your mission or your values first and money as more secondary, you're often around other people who are underpaid. It's really easy in those environments to start thinking that people with money are bad or that the money itself is bad, right? And actually having a view of money like it's negative or like you're harming someone if you take their money, rather than seeing that you are offering value to someone and they're excited to receive that value. And so I think when you can shift your mindset from money being negative to just being neutral, just understanding it as a tool. And I'm not saying you have to say it's positive or love it. It's just a tool. It's an amplifier. If you're doing good work, money will amplify your good work. That's sort of the mindset shift that I think is helpful. That's what I mean by neutral.
Yeah, that's great. I totally agree with you. And I do think a lot of people are raised with, these negative sort of just, like you said, you just sort of internalize something negative about money, maybe just came from family members, something they said like, well, money doesn't grow on trees, or, just these sort of sayings that we hear about money. Money is the root of all evil. And truly, it is a tool, and we can all use it. However, we have those values-based mission, the priorities that you have, doesn't necessarily have to be spending a lot. Think about giving a lot. Earning more gives you the opportunity to do more for others, whether they're your family members or charities or, whatever's important to you. So it is a pretty important mind shift. So, if somebody's out there feeling a little, I don't know, overwhelmed or anxious about money, maybe they're thinking about, I have to do taxes in a month or two. And I'm going through this right now. Like, I'm gathering all my stuff. I have a very kind of manual system for taxes that I've just kind of done. Then I had a pretty complicated tax situation for a while. It's a little more simple now. But if anybody's feeling a little anxiety about that, what advice can you offer right now? Maybe whether it's taxes or even if it's just related to not having as much taxable income as they would like.
Such a good question. Yeah, I think if you're feeling some dread of like doing the thing, making yourself do the thing, which I know a lot of people feel entering into taxes, one recommendation that I can give is to just try and associate it with something really positive. So think rewards. Now, we're not trying to blow the budget. So I'm not saying go buy a car, but you know, buy your favorite latte or, something sort of a small treat when you complete a task and put time on your calendar. And then what I recommend is if you're going to do, open up your tax documents and start going through, the challenge is really just getting started. Once you're in it, it's usually it's not as bad as you think. So the reward is for starting. And then I recommend just cleaning your desk, getting a nice cup of tea, like doing whatever you can to make that environment feel good. Play some nice music, get the kids with a sitter, whatever you need to do. And then actually, this book right behind me, Atomic Habits, what it talks about is like what fires together wires together. So when you do that, when you like go to a hard task like doing your bookkeeping, opening your tax documents, and you have a candle and you have your tea and you have your nice music and your clean desk, over time that's going to create an association that it's a peaceful thing to do. And it really does work. So the second time you come back to it, it starts feeling like, oh, I get to have that tea again. Like a little bit nicer feeling over
That's
time.
great. Okay, I'm going to do that. I'm going to give myself a reward. I haven't decided what that will be, but when I finally get everything shipped off to the accountant, I'm going to do something nice for myself. I really like that
Yeah.
that concept. What do you
Hmm.
think people are like misconceptions that entrepreneurs have about taxes? I know new entrepreneurs sometimes are very uneducated about taxes and they may not even be aware that they have to do some estimated payments, and then all of a sudden, like in year two, they're starting in a hole because they have not paid into the system, and so they're just not prepared for a big tax bill. I know that's something I've seen often. Are there any misconceptions or just misunderstandings from either new or experienced entrepreneurs that you see are maybe costing them money or just costing them a lot of hassle?
Yeah, Laura, so many, so many. I was looking at this study that the Tax Foundation did, and they just found that just basic lack of tax literacy costs the average US taxpayer over $1,000 every year. And I would say that young entrepreneurs, just starting out, people just starting freelance work, starting a business, are probably losing more than that. And you touched on some of the reasons why. One, not understanding that estimated quarterly taxes are a thing, they're real, they're an obligation, not an option, and that you pay penalties if you're not doing it. So you get a grace year before penalties start, but even during that year, you still want to be paying taxes as you accumulate income, or else you're going to face a really big tax bill. And that can be a lot bigger than you expect, because another thing people don't understand when they work for themselves is that self-employment tax is going to be a much larger percentage of their tax bill than they realized, or than what it was, the equivalent was when they were an employee. So that's a big one. Your show is so good and I get so many tax tips from it, but just to review self-employment tax for everybody, could we do that?
Yeah, oh, yes,
Um,
please.
when you work as an employee, 7.65% of your pay is pulled out of your paychecks to pay into your Medicare and Social Security. And your boss matches that 7.65%, but they're doing it out of their pocket. So you never actually even see that on pay stubs or your W-2s, but it is happening. So when you're self-employed, you're now not just the employee, you're also the boss. So you're wearing two hats in one person. And it means you have to pay both halves of that Medicare and Social Security. People don't know that because it's been invisible to them and because we don't teach taxes in high school like I wish we did. And so, self-employment tax, which is what we call that contribution to Medicare and Social Security, it's 15.3% of your profits starting from the first dollar that you earn. It doesn't have that grace period of the 0% tax bracket that federal income tax does. So it's just a massive portion of your tax bill that you often aren't aware is there. So getting friendly with a nice income tax calculator as you go throughout the year. That's something I recommend to just get a sense of like, oh, okay, if my profit is $50,000, my tax bill would look like this. Just a little check-in with that in theory is helpful to be getting a handle of like how big your tax bill will be, and then learning the rules about quarterly taxes to make sure that you stay caught up with those payments before you face that tax bill that's due April 15th, no extensions.
Yeah, I think for a lot of people, maybe who are just starting, they feel very uncertain about what their income will be. And they feel like, well, how can I estimate? I don't, I don't know what my revenue is going to be. I'm not even sure what my expenses will be. So, how do you recommend people get a handle on that until maybe things smooth out a little bit, or maybe they never smooth out? I mean, there are certainly some businesses that are quite seasonal that, you're going to see big ups and downs in revenue.
hmm Well, that is actually really where I specialize because a lot of creative people, and frankly, just me and my small business, which is also seasonal, like we have
Yeah.
huge swings in income, right? Anybody who has a product based business, you're going to have a huge amount of income probably in the holiday season and a really dry spell where you're also needing to like put cash into buying inventory. Like, so there's lots of businesses that suffer from this. Some methods are, I mean, honestly, the cheat code is bookkeeping. It's just
Hmm.
actually setting up some basic bookkeeping so that you know what your profit is and paying in every quarter, doing a calculation for what tax you would owe based on that quarter's income. That is the most humane way to pay your quarterly taxes, because instead of the option that most accountants and most tax software give you, which is to pay a quarter, each quarter to pay one quarter of last year's total tax. That's an option and it's fine to do that. But it doesn't work very well if you're in a season where you have no cash and you can't afford that payment. And then you're in a flush season with tons of cash and you're going to owe a lot more than that. So doing your bookkeeping and paying every quarter keeps your tax payments in line with the actual money you're earning. And even though you're estimating, and I think people are very uncomfortable with this concept because they can't get their head around the fact that this is an estimate. It's not exact. But I want to just reassure you, it is. It's called estimated quarterly taxes, not exact perfect quarterly taxes. It's really humane to pay them each quarter according to actual money you earn, because even if you're really wrong with the number, you won't be paying penalties. You'll be much more in line with what you actually owe.
That's great. That's a great tip for people who are feeling like, oh my gosh, I've got to. And then if you give your accountant some high number and they give you, oh, well, this is what you're going to have to pay each quarter, you may get into a situation where you're overpaying. And then, you will get that back if things reconcile in your favor. But I like the idea of really just trying to be very deliberate about it as you go. And if you're working with an accountant, they can help you set that bookkeeping system up so that, you've got that foundation, that structure in place to make an educated estimate based on what happened last month, what happened this month, and then we have a whole quarter. We got 3 months of data there to say, this is likely going to be the norm for this quarter, this year, maybe next year's quarter as well. So yeah, that's a great way to look at it. Where are you seeing people really mess up that's costing them money?
Good question. I think maybe the number one area that people don't take advantage of is startup expenses. You only get to take startup expenses if you know they exist, if you know it's a category. But it is. And as you begin your freelancing, you qualify. So what's important to know is that startup expenses are any expense that would be deductible as a business expense, but is incurred before your business actually starts. So it's actually a retroactive expense. You can take it from a year prior, which is kind of amazing. But people sort of think in their head, oh, I'm only allowed to take business deductions once I'm operational. Well, think about how you're going to start that business. Are you going to have a conversation with an accountant? Are you going to buy my tax book or program? Are you going to buy Laura's solopreneur book. I mean, those are expenses that will help you start up that business, right? You might meet with a lawyer. Maybe you want to form an LLC. It's not required, but those are sort of things you do prior to opening your doors that you're going to spend money on in order to get that business up and operational. So you get to actually keep track of those and then take them in the year you open listed as startup expenses. It's not a category outlined on your Schedule C. And so people don't know. You have to know it to get it. It is a category you put a label on, and it goes in your other expenses block, which is a sort of place to catch all the stuff that Schedule C didn't categorize, neatly.
You see, if you don't know, you don't know. I mean, these are the things where having an accountant and somebody who's an expert can really pay off. I love that example. That's terrific. Is there anything else that you see maybe for people with like side gigs? Maybe they have a day job, but they're also doing side work on nights or weekends. Is there anything that people might be missing?
Yeah, well, a lot of those people don't realize that they're fully entitled to business deductions. So that's a really important thing to know. And so you want to be tracking them. I will also say for people who do side gigs, tracking your deductions can sound intimidating. You do need to keep receipts, but tracking, the bookkeeping part, you can just use a spreadsheet. It doesn't have to be anything fancy or that you pay a monthly fee for. A spreadsheet is completely fine. And actually, Laura, this might be a good place to mention that on my website, I have a free visual guide to tax deductions. It's really built for people who didn't learn this stuff in high school. And so it shows you kind of what you call the stuff that you're paying for in your business, and then points over in this beautiful rainbow chart to what the IRS calls it and exactly where it goes in your tax return. So if people want to find that on the Sunlight Tax website, that is a free download that will be a helpful start.
Yeah, terrific. I've seen it. It's great. I'll put a link to it in the notes for the show. And so the website is sunlighttax.com. I also want to talk about anything new that's happening with taxes this year. I know there have been some changes. Talk to me a little bit about any changes that might affect self-employed people that they really need to take advantage of this year, or maybe something that started in 2025 that maybe they didn't even know about.
Yeah, so we did have this massive tax bill passed over the summer, the One Big Beautiful Bill Act. There are some things that won't affect us until next year and the year after. There's phase-ins, but for 2025, there's four primary things to think about. Are four new deductions. They all go on this new schedule that they created, the Schedule 1A. You don't have to memorize that number. I'm just saying it. Let me just outline what those are. The no tax on tips is one of them, and that potentially will affect people who are self-employed. If you work in a barbershop, beauty, the serving industry, bartender, that kind of thing, an industry that is customarily and regularly receiving tips. It's up to $25,000 in tips that you get to take a deduction on your federal income taxes. That's a thing to be aware of. There's also no tax on overtime, and there's no provision that says you have to be an employee to get that. If you're doing overtime, if you get overtime pay as a self-employed person or as a contractor, that's valid for you. So that's another one. And that is $12,500 of overtime pay deductible per individual. So you double that if you're married filing jointly. There's no tax on car loan interest, which is not specifically related to freelancers. That's really for any taxpayer who took out a big car loan. So that you get to deduct up to $10,000 in car loan interest. That's a big car loan if you're paying $10,000 in interest. But
And there are some limitations on which cars, right, that you can
oh yeah.
deduct. It's not just any car. It has to be specific to made in the USA or assembled in the USA. Definitely find out more details about that.
It does. Actually, if you want me to share for you a link in the show notes, there is a VIN decoder. So you actually have to put your VIN number of the car onto your tax return. And yes, Laura, what you were mentioning, it has to have final assembly in the US. That's part of it. It's about American cars. So you can put your VIN into this VIN decoder and it will tell you, because you don't know. You
Yeah.
don't necessarily know if your car was final assembly in the US or not. So this is a little online tool from the
Love it.
NTSB that shows you. The last one, again, not for freelancers specifically, but one of the 4 new deductions this year is an expanded deduction for seniors. This deduction it's basically just an increased standard deduction for seniors. You have to be 65 or older, and it's per spouse. So if you have 2 spouses who are eligible, you can both get it.
Yeah, I think it's like 6,000 or 6,500 somewhere in there, which is great. That's maybe can offset some other taxes that a senior may have. So, and there are income limits on some of these too. If you're a tip earner, you've got overtime. They always put income limits on most of these things. So,
Yeah,
definitely ask about that. But if any of these apply to you, definitely make sure that you're aware of whether you can take it or not. Another one that I'm kind of personally excited about is the SALT tax increase. And I think that started last year. But
it
anyway,
goes
it
into
went
effect.
up.
Yeah, for 2025. Yeah, to $40,000. So it's increased substantially from the 10,000.
Yes. So that's, if you're a homeowner, that alone could make the difference between whether you can itemize successfully or claim a standard deduction. So,
Mm-hmm.
my recommendation for people is keep as much detail as you can, because you want to make sure that you're not just saying, oh, yeah, I'm just going to claim the standard deduction. If you add up all the itemized pieces there, it may be more advantageous for you, but you're not going to know if you haven't kept up with the details. You haven't logged it either on, like you're saying, a spreadsheet or some kind of bookkeeping software, or, whatever method you're using. You got to have the details to make some of those important decisions. Otherwise, you may be losing money.
So true. Can I mention one more thing, that there's a very specific group who needs this?
Yes.
If you had a baby in 2025, one very important thing is that starting this year, on this year's tax return, you can elect to open a Trump account, and you can make a second election to have $1,000 put into it courtesy of the US Treasury. So this year, it's only for people who had a baby in 2025. This will also apply for babies born in 26, 7, and 8. Those babies haven't been born yet. It's really important to know that this election exists. You had a baby, get that free money.
Yes, absolutely. And if you miss it, you don't do it on your tax return, you can still apply, right? You don't have to do, but it's just easier if you file that form. Just kind of simplifies things. And then I think you can start making contributions this summer. The limit's like 5,000 for this year, and maybe that will go up, adjusted for inflation in future years. We'll see.
There is a website about the Trump accounts. It's a little light on info right now because I think they frankly still are working out some of the details. Everybody's interested. It's a great idea if you have a child who could benefit. It's a wonderful idea. In a nonpartisan way, I think it's good for all people.
Absolutely. We can't turn down free money. And even if you have an older child, you can still open a Trump account for them. They're just not going to get that $1,000 grant or gift, whatever we want to call it, if they have to be born in that 4-year window. And a lot of people are asking me, well, how does that compare with the 529 plan? Should I, and I'm saying 529 is still great for education expenses, but if you qualify for the $1,000 Trump account, do it. Have both. There's no rule that says, you can't have multiple tax advantaged accounts.
For sure.
And the Trump account is for any future use for the child. It's not pegged for education. So there's a little bit more flexibility there. But yeah, thank you for bringing that up.
Yeah, you can use it to buy a house.
Once the child is 18, I think it turns into an IRA automatically. And so some of the IRA rules apply. But, at that point, they're eligible to use it, of course, with the rules of the IRA in terms of withdrawals that are early, and those sorts of things. So yeah, it's something brand new, and a lot of people really don't even know that they exist. So yeah, find out a little bit more about that for new parents and people who are planning to have a child in the next few years. It's a unique opportunity. Well, Hannah, as we look forward to tax day, I know you're very busy, and I'm thank you for spending so much time with me on the show today because I'm sure you've got a lot of things to do in tax season. What advice would you give people, whether they're a solopreneur, whether they're self-employed, or maybe even just somebody who is listening that happens to be an employee? Do you have any words of advice for helping people save money on taxes as we look ahead to this year's tax season?
Yeah. I mean, one one way to save money is to do your taxes early. I kid you not, because a lot of accountants have a February discount. They'll discount their rates a little bit if you get in early, because there is such a crunch in the world of accounting towards those last 4 weeks of tax season. So if you are an early bird, you might be able to get a little benefit from your accountant for a discount. Besides that, I think good tracking is the best. It is such a simple thing, but just having a designated place in your house where you keep all your tax documents, I find that to be really helpful. Like when I have forgotten that there's a 1099 sitting on my dresser when most of them are in on my desk, that's when I end up like having a panic moment. So I think every time the mail comes in, like having religion about that 1099, that tax document is going to go in the same place every single time. That's really helpful. That's probably my best like tax calm advice for people right now.
Yeah, terrific. And your book, of course, Taxes for Humans, is a great read. It's a fun read, too. I love the way that you made a very dry topic really kind of just fun and engaging. So thank you for that.
Thanks. I mean, it's kind of like being a funny dentist. The bar is very low, but I definitely tried to put a lot of humor into it. I want people to really read it and like understand.
A lot of your personality is there, and it's not an easy topic for most people. So yeah, this book, Taxes for Humans, I've got it right here in front of me. You've got a lot of stuff going on. Talk a little bit about the podcast. What types of things are you doing on the show?
Yeah. So, in the Sunlight Tax podcast, one of the things that I do is I give tax updates. This is sort of important in conjunction with the book, because the book I wrote as a reference, right? It's a tool to do your taxes, to get that tax literacy that, might be costing you not to have. But to write a book about taxes is to acknowledge tax law changes every year. So in the book, the way that I structured it to help with that is I gave a sort of baseline rate and said, this is the rate for this year. And this is a QR code to the spot on the IRS website that shows you the current year rates, so that this book is just as good in 27, 2028 as it is this year. And my podcast is where you can come and you can see, I talk about Trump accounts and no tax on tips and all the different healthcare changes that happen with the tax law. And also just kind of warm encouragement for people doing work that is not necessarily motivated by money, but just, whether it's creative, whether it's care-based or values-driven work. I want people who really passionately care about the work that they're doing in the world to just feel more seen and supported when it comes to your taxes. So the podcast is just kind of like a warm place to get a little nugget of tax knowledge every week.
Fantastic. Hannah, thank you so much for being on the show and sharing all your great tips and just being a light, like a sunlight, being a light in the world of taxes. It just makes it, just a breath of fresh air, really, when we think about how much of a burden it can feel every year. It's nice to feel like you've got a little bit of a different angle and perspective on it.
Thank you so much. I've learned so much from your show, Laura. I was so honored to be asked on. So I really, really appreciate the work that you are doing. I think it's really important. So thanks for having me.
You're so kind. Thank you for being here. And everyone, check out Taxes for Humans. You'll love it. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast, and we've got a great team. I want to thank Steve Rickyberg for audio engineering the podcast. Holly Hutchins is our director of podcast. Morgan Christensen is our advertising operations specialist. Rebecca Sebastian is our marketing and publicity manager. Nathaniel Hoops is our marketing contractor. And Maram El Naguib is our podcast associate.